Hi guys, here's Doc's Market Minute for Wednesday, February 24th. This is my gap chart of the S&P futures. So what I'm doing here is I'm only charting it during the time that the cash market is open. And it shows these clear gaps that we have, which I've marked by these blue rectangles here. So these blue rectangles were the gaps on the way back up. Okay, so we left all this laundry on the floor on the way back up. And what the market's doing right now is going back and closing those gaps. And so yesterday we closed this gap very easily. And today, actually, we've created another upside gap here, but we're just about to close this downside gap with a little bit more weakness. And I don't know if the market's going to feel necessary to come down and close this gap. But generally what we found is that when we're in one of these big, ugly consolidation patterns like this, which is currently what we're in, is the markets tend to view these gaps as sort of a target. The best expression that I've heard that explains gap fills is, in a sea of sand, any flag that sticks up becomes a target. Now, with that in mind, if that's what we're going to see, if we're going to see the price come down and fill this gap, then we may be seeing a chart pattern in the formation, which is probably one that nobody's looking at. Let me go over to the SPY chart and expand this a little bit. Here's the daily chart of the spiders, which is the ETF of the S&P 500. You can see that the overhead level of resistance right now is about that 195 level. We came to a dead stop there a couple of days ago on a very, very strong rally. I mean, this was an epically strong rally, and now it's getting faded back down again, which is the characteristic of a bear market. But what I'm also seeing now when I look at this is, if this is considered kind of this neckline for this, we almost have an inverted head and shoulders pattern tracing out here. And if we go back down and fill those gaps out and then bounce from there, that will cause that right shoulder to be printed. And what we can look at is that the target from here then becomes the distance from the neckline back down to the bottom of the head. Okay, so let's draw that in and let's expand that, make it a little bit bigger so we can see it. Okay, so that's kind of the distance there. And then so the upper target becomes, voila, back to 208 again. That would be a little surprising. That would be well above the 200-day moving average. That's more than I would expect, but again, that's just the chart pattern laying out. So what we might see is, as everybody becomes really negative on the next wave down and thinking that we're just going to drop down to S&P 600 from here, this is where we might see some kind of catalyst come into the market. Perhaps it's the Fed, as usual, might step in and create a little rally. And then if we see something breaking above that 195 level, we might get a lot of short covering until we reach the top of this rally, wherever that is, whether that's at the 200 level, whether that's the 200-day moving average, or maybe it's all the way at the upside of this pattern, which would be near the 208 or 2080 level on the full S&P. Again, what I'm always looking for is not necessarily what the herd is doing or what everybody's opinion of is what the market is doing. I'm looking at the chart and saying, okay, all of the information that we need to know how to trade this is in that chart right now. The market is trying to tell us what it's about to do, and it's all for us to just interpret that and understand the signals, understand what the market wants without our bias being attached to it. So maybe just something different to look at here with the inverted head and shoulders pattern setting up. It could fail. It could drop from these levels like a stone, and I don't care. All I'm doing is I'm looking at different plans, plan A, plan B, plan C, trying to understand what it is that the market wants right now. And this is one possible need for the market. So we'll see what happens from here. Thanks for listening. We'll see you tomorrow.